What's going on, guys? It's Hunter, and in this video I'm going to be going over the number one indicator to use and something you should always pay attention to before you buy or sell any stock. And as always, if you find any value throughout this video, make sure to leave a thumbs up. And if you're new here, I post videos on trading and investing in the stock market, so consider subscribing to the channel. Now, the indicator that I'm referring to is the volatility index, or the volatility of the entire market. Now, this is something that I really did not pay any attention to when I first got started, and I really had no idea how to use it as an indicator or a signal when you're investing. So when you see a high level of volatility, that means there is a lot more fear in the market, therefore causing these much more aggressive swings in different stocks or just the market as a whole. Now, during bull markets, when you see stocks slowly increase over a longer period of time, the volatility is generally much lower, which means there is a lot less risk involved investing in any stock or index. But if you see volatility start to creep up or even break out to a new level, stocks become a lot riskier and the probability of a big market sell-off starts to increase. So I'll show you a few ways you can use the volatility index as a signal to better identify your risk and to judge whether or not you're getting a good buying opportunity on a stock. So let's say you wanted to start investing in tech companies like Apple, but you had a tough time identifying different entry points or just knowing whether or not it's safe to start investing during these different pullbacks. Now, this is when being aware of market volatility or the NASDAQ volatility becomes very important. So let's jump into my TD Ameritrade account and I'll show you guys exactly what I'm talking about. All right, so what you guys are looking at right now is my TD Ameritrade Thinkorswim platform. And what I have on the screen here is ticker symbol VXN, or the VIXN, which tracks the volatility of the entire NASDAQ. And this is something a lot of people don't even know about and definitely don't take into consideration, but I highly recommend paying attention to this before buying or selling any tech stock. Even if you're investing in what you think is a good company with a lot of growth potential, that doesn't mean that the stock itself can't drop 10, 20% in just a couple days or weeks if the volatility of the market is at a certain level. So if you're looking to invest in Apple or any big tech stock, you should definitely use this as a reference when you're looking to identify different entry points. To give you guys a better visual and show you how exactly this is connected to a stock like Apple, I'll switch over to this flexible grid here, and then now we have the VIXN on top and Apple stock on the bottom. Historically, I would say a low level of volatility would be below 20, which is what we saw prior to this big sell-off in March. But since the markets have been so volatile since COVID hit, anything really below 30 or so would definitely be considered very bullish or a good investing environment. When you look at the bigger picture, you can see that stocks in general, like Apple, tend to go up as volatility falls or if it's just pinned at a low level like this. And then on the other hand, where there are spikes in volatility, especially in these spots that I've circled, you can see that Apple has pretty significant pullbacks. So the first thing you would do if you were looking for an entry point on something like Apple is determine where the volatility is right now and decide if it is at an investable level for any stock. And you should always be aware of these levels because when you start to see these breakouts in volatility, these dips in Apple tend to turn into more than just dips and continue to sell off. Since this is the 1 year chart and everything is kind of crunched in together, it can be tough to see exactly how big these moves are. But these spikes in volatility can be upwards of 50, 60%. So, if you're following this on a daily basis, you'll really see how aggressive these moves can be. Take a look at what happened to Apple stock when the volatility ramped up to the mid 40s. So this might not look like a significant drop, but when we zoom in here, you can see after this initial pullback of around 4 or 5%, it continued to go on and sell off for another 15, 16%. And obviously, Apple is a very strong company, and if you've ever traded it before, you know that a 4 or 5% pullback in a single day is pretty significant. And since pullbacks like this rarely happen in these big companies, I'm sure a lot of people saw this 5% drop as a great buying opportunity, but anyone who got in right around this level got caught and hit for a pretty big loss, and you can see it still really hasn't even recovered back up to that level. So for shorter term investors, this was obviously a tough trade, and the main reason that they got caught is because they weren't aware of how high the volatility level was, so they didn't really know exactly what they were buying into. And this 50% rip up in volatility was definitely not signaling a great buying opportunity, as it was starting to break out to new highs, suggesting that these sell-offs in these big tech companies could continue. So if you're looking to buy into these small dips and try to capitalize on a reversal, make sure the volatility is at an investable level so that you don't get caught. And big drawdowns like this are definitely avoidable if you're paying attention to everything that the market's saying and not just trying to capitalize on every single dip. So what you're going to want to look for if you're trying to capitalize on some of these dips is to have either volatility falling and breaking down or just consolidating around a general lower level. This tells you that there is a much lower chance of a big market correction and you're really just buying into a much safer market environment. So for example, if you look at this uptrend right here, there are still 4 or 5% corrections that you can take advantage of. And these are much easier dips to buy into as you have market volatility dropping and really just staying at this lower level. This provides a much better buying opportunity, as this suggests that these are just dips and won't turn into major corrections like we saw right here. And if you want to look at where Apple is currently trading today, you can see that we still have 5% pullbacks. However, the volatility is very low and it's around 27, which gives you a much better entry point than what we've seen when we've had the volatility break out into the low 40s. So these small dips that we've recently seen in Apple have a much higher probability of reversing and continuing to push up as this level continues to break down. So in my opinion, this is probably the best signal we can use when trading stocks and is overall just a key component of risk management. Most people don't look at the many moving pieces in the market and they just focus on individual stocks and their charts to find different entry points, but I try to listen to everything the market is signaling with this volatility index. And once we're in what people refer to as a bull market, it becomes a lot easier to buy into any stocks as the volatility continues to drop and these prices tend to just increase over time. But some things to always just keep in mind are stocks increasing as volatility starts to creep up, or if we see a big spike in volatility and it remains at that level for a couple days, that suggests that stocks can continue to sell off. So I hope you guys liked this video. If you want to see more in-depth breakdowns like this, make sure to leave a thumbs up and subscribe to the channel. And if you guys have any more questions, let me know in the comments below and I'll try to answer them as best I can. But anyways, I'll see you guys next time. Peace.